Hi, in this video we're going to have a look at how you can reach over £1,000 in passive dividend income in 1 month. I personally obtained this back in February 2024 and have surpassed it since. We'll look at which stocks and ETFs paid me in that month and how many of each I owned at the time. So let's get into it. Welcome to Destination Wealth. Over the last 15 years or so, I've been more and more interested in shifting my investment strategy over to dividend paying stocks. Stocks that pay twice, 3 times a year, sometimes a special dividend, and the ones that increase their dividends year on year. Now, not all of them do it. Throughout the pandemic, a lot of them cut their dividends or stop them completely. But the really good companies, the large companies, the ones with lots of cash on hand who were careful, have all reinstated that and increased them further. My aim is to get my portfolio to a point where all those dividend paying stocks pay me enough each year that covers my current salary and gives me enough money to live off without touching the principal investment, essentially replacing my salary and paying all my bills and holidays and anything I want to buy. So over the years, I've tailored my portfolio towards the stocks that pay consistently, regularly, and regularly increase. Now, little disclaimer, this isn't investment advice. It's just something I like to do. I really enjoy doing the research. And if you want to invest in individual stocks, you need to do a lot of research. And sometimes that's not for you. If researching annual reports, their interim reports, researching news and all that sort of stuff is not something you fancy, then stick to ETFs and funds, like the FTSE 100, the S&P 500, just buy the indexes and you'll do really well. But if you really enjoy stocks and shares and you really fancy getting deep into the ins and outs of different companies, then this is for you. If you do fancy doing that, stick around to the end, because there's a little trick that I learnt from a really well-known investor called Robbie Burns, the Naked Trader, who makes reading company reports and interim reports a lot easier. Now, I don't just buy these stocks willy-nilly. I look to buy them when they're on discount. So not only do I get the dividends recurring every year and increasing every year, I also aim to get capital appreciation on the stocks that I buy. And every stock that I do buy, when I get paid those dividends, sometimes twice a year, some of them are 3 times a year, sometimes they pay a special dividend. Stocks like Shell pay 4 times a year. I automatically set up a dividend reinvestment plan through the SIP or through the ISA that I have. The broker automatically reinvests those dividends, and it's really cheap. The fees are really cheap. It's a much cheaper way of reinvesting those funds. And I rebuy shares in the company that paid me the dividend, which then gives me more shares in that company, which in turn each year gives me more dividends. It's like a snowball effect, which is exactly what you want. It's called a DRIP plan, not a particularly nice name or an acronym, but it's a DRIP, dividend reinvestment plan. And pretty much every broker has that option. It's usually just a tick box, and you tell them that when you get paid a dividend, they will automatically rebuy stocks up to the value in that same share. Usually happens sometimes a week later, sometimes a little bit longer than that. How did I get to earning over £1,000 in 1 month in dividends, in completely passive income? It was in February that I received over £1,000, the first month I've ever had more than £1,000 in dividends. And it was only 5 stocks that paid me that month. Now, I earn a lot more than that, but it was only 5 stocks in that month that equated to that £1,000. 5 stocks out of 23 stocks that I currently own. Those 5 stocks were Ashtead, who are a plant hire company, mainly based in the States, but all over the world. Huge plant hire company. Apple, we all know who Apple are. B&M, the UK discount store. Diploma, who makes seals, pumps and things like that for the oil and gas industry, amongst others. Ecora. Now, Ecora are a mining royalty company. They buy royalties on mines and then get paid a fee when that mine digs for rare earth minerals or battery metals, that sort of thing, whatever's on that mine each year. And Games Workshop. Now, I'm sure most people know who Games Workshop is. Games Workshop specialises, UK-based company, specialises in tabletop miniature games. They are world renowned. They've got a massive following. Great stock, and I'll be doing a separate video on why I think that's a great stock in the future. All of these 5 stocks I've owned for quite some time. This is the number of shares of each of those stocks I owned at the time. And this is exactly how much money I had invested. So not how much the stock was worth, but how much I had personally invested into these stocks. Now it's slightly skewed as it includes the reinvested dividends over the years, which obviously wasn't my own money. It was my money, but it hadn't come directly out of my bank account. It's what the company had paid me anyway. What we'll have a look at now is this year, 2024, and what I can expect to earn from these 5 stocks over the whole period of a year. I use a free app called Stock Events to track the dividend data for all my stocks. It's the best one I found. It's free. You can have a paid version. I just use the free version. It's the best one I've found so far. And the link is in the description if you want to download it. Now this one, Ashtead pays twice a year. Small interim dividend and then a larger final dividend in Q3 or quarter 3. I can expect them to earn £223.97 for the year, and the current yield for Ashtead is 1.45%. But because I bought that company a while ago and I still reinvest into it, my average cost price is £22.56. And on a shareholding of 272, that gives me a yield on cost of 3.65%. So my real yield is 3.65%. The next one is Apple. Now Apple pays 4 times a year, which is great. And this year I can expect to receive a total of £244.31. And the current yield for Apple is 0.44%. Not great. It doesn't sound great, but on my average cost price of £19.84 a share and a holding of 316 shares, 316, that gives me a yield on cost of 3.9%. So the current yield is 0.44%. My yield is 3.9% because of however long ago I bought them. Moving on to B&M. B&M usually pays twice a year, but this year they paid a special dividend in January as an exceptionally good end of 2023. So they'll pay me 3 times this year, and I can expect to earn from them £788.45, all of which will be reinvested back into B&M stock. Current yield for B&M is 3.33%, but on my average cost price of £4.36 a share and a holding of 2,295 shares, that gives me a yield on cost of a lovely 7.88%. On to Diploma. Diploma pays twice a year, a larger final dividend in Q1 and a small interim dividend in Q2. I can expect to earn £532.89 from them this year, and the current yield for Diploma is 1.28%. But again, on my average cost price of £8.97 and a holding of 930 shares, that gives me a yield on cost of 6.39%. Not quite as good as B&M, but still pretty good. Ecora. Ecora pays 4 times a year, but only 3 times expected this year. I can expect to earn £692.21. Royalty mining companies do tend to pay pretty good dividends. Ecora's had a tough time, as have a lot of mining and mining royalty companies over the last couple of years, but things will start turning and that dividend payment will start increasing, in my opinion. So the current yield for Ecora is 9.68%, but on my average cost price of £1.39 a share and a holding of 13,685 shares, that gives me a yield on cost of 3.64%. A lot of this is due to the astronomical drop in the share price that Ecora have had, but I'm confident that'll turn soon. And finally, that brings me on to one of my favorite stocks, Games Workshop. Games Workshop usually pays a dividend 4 times a year, and I can expect to earn £497 31 pence this year. The current yield for Games Workshop is 3.54%, but on my average cost price of 78.51 a share and a holding of 155 shares, that gives me a yield on cost of £4.09. So as you can see from these, if you buy good companies, big companies, as safe as can be companies, and you buy them at a sensible price, i.e. a low PE and a PEG under 2, a PEG under 2, of which I'll come on to that later in different videos. And you pick companies that have got a good track record of paying regular dividends and, more importantly, or just as importantly, increasing those dividends year on year, then that will really increase your yield on cost. And it can snowball those dividend payments and you can do extremely well. Just be sure to reinvest all those dividends by a DRIP plan, dividend reinvestment plan, through your broker. It's the cheapest way of doing it, and you just don't have to think about it. Once you've set that up once, it'll do it for all your investments. So that in turn will buy you more shares of the same company that pays those lovely dividends, which next time they pay a dividend will give you more dividends. It just grows and grows and grows into that lovely, juicy dividend snowball that we all want. Once you get a decent amount of capital invested, say £100,000, once you get to that sort of level, then the numbers really start to become significant and life-changing. So you want to invest in individual stocks? Well, you're going to have to read company reports, trading updates and stock news. If the thought of that and trawling through these company reports bores you out of your mind, what if there was a way that you could speed up the process and just pinpoint the parts of a company report that you're really looking for? So the website we're going to be looking at to be able to do this is called ADVFN. Now, I'm not subscribed. I am subscribed to a free account. It's completely free. I'm not affiliated, but I'll put a link in the notes below. So how do we set this up? Well, it's pretty easy actually. Whatever page you're currently on, if you scroll right to the top and then in the bar across the top, you've got a button named News. Click on that News and scroll down a bit further, and then you'll have this heading, these headings across the top here. And what you want to click on is Highlight Phrases. So under Highlight Phrases, you have 20 words or phrases that you can input, anything you like, and you can select a color next to them so that whenever you click on any report, any information, anything that's reported on ADVFM website, a company report, a trading update, news, whatever it is, it will always highlight those words so you can just quickly see them, quickly jump to them. As you can see here, I've got words like challenging, difficult, down by, unpredictable, lower, all in red. And then you've got things like above, exceeding expectations, positive, favorable, profit up, excellent. Obviously good things to see in a company report or trading update. So they're in green. It just highlights everything for you quickly. So if you've only got 5 minutes to have a quick scan through, you can see those little bits of information and it'll take you straight to them without you having to read the whole report. Now, as I said before, still a good idea when you've got time to read the whole report, just in case there's something in there that jumps out that's not been highlighted by those words. If you like this, then check out this video next, which I go into detail on how I went from zero to over £300,000 in invested funds. And that was with making lots of mistakes along the way.